Good afternoon, traders. Welcome to the market recap. I'm John Hoagland, filling in for Dan the Man Hodgman. Thanks for trusting us with your time. Hopefully, you've had a good trading day, some interesting opportunities. We had, excuse me, my goodness, we had a couple of markets doing opposite things this trading day. We had crude adhering to range-bound rules and gold adhering to breakout rules. We're going to take a look at those on the charts very shortly here. Tuesday, June 29th. Tomorrow is June 30th. It's the last day of the quarter and the last day of the half of the year. Might be an interesting trading day for us. Excuse me. I am sorry. We're looking at the ADP unemployment report, Chicago PMI, pending home sales tomorrow, and the EIA petroleum status report all due out for us tomorrow. So we'll be looking at seeing how those respond to the markets. We have the API coming out here in about a half an hour for accrued traders to see if there's any changes in inventories in the last week. We have the OPEC meeting on Thursday, which should be another interesting one for crude traders, see if they're going to boost production at these higher prices. There is some murmur of them doing such a thing, which would be great because I didn't like spending $4.25 on a gallon on gas over the weekend. Anyways, just thinking about what happened in the markets today, gold really maintained balance. Best trades were as after the market was open. Just seems to be waiting for new information, API, EIA, and OPEC meeting on Thursday. So lots of data coming out in crude. It made sense that it was a little bit range bound today. The mini S&P's test finally. The base of the late spike took almost all day for it to get all the way down there. Also tested to last week's high to the tick before turning around and kind of just returning back to more of a range-bound type of day. NASDAQ, another all-time high today, as was in the S&Ps. The late spike rules. The late spike rule rules. Gold, the opening range at the high of the regular trading hour session after a brief pullback from overnight inventory before the open turned out to be the best trade location of the day. That was about a 10 or a 12 tick risk on that opening range trade, which has not been very fruitful lately. It's very cyclical when a lot of traders notice that the opening range trade is paying. A lot of them jump into it and usually end up wrecking it. It seems as though we may be headed into a good cycle, perhaps, for opening range trades in gold. But boy, that was a $258 move. That's $2,580 per contract from the high to the low of the regular trading hour session today, before it kind of falls into a balance, comes up. It tested down to the weekly kickoff low, down through it, came back up above the weekly kickoff level, so we don't really have any true acceptance of prices at down below that weekly kickoff level, which is, by the way, 1757 even. So we're going to have to see if we can continue to wear out buyers down there if we're going to continue to move this market lower. Today, it doesn't look like we had much success in doing so. Euro opening range, the high of the regular trading hour, the regular trading hours, I should say, breaks. Okay, means we left the opening range at the high of the session. We came back through. Sometimes that can provide a support level for the rest of the day, which is what happened in the euro today. And the 10-year, second day in a row, targeting naked points of control. The previous naked point of control was tested yesterday and today. So more range bound, more short time frame levels being respected in that 10-year, as rates have hardly been able to move away from 1.5%. So again, remember, tomorrow is Wednesday, June the 30th, last day of the quarter, half the year gone already. Hard to believe. It's also group coaching day. There's the link. You want to join group coaching, we'll be happy to see you there. We've got a couple of really good questions emailed in already, so we'll look forward to seeing you there. Hopefully you enjoyed the Coach's Playbook today. We were talking about, this whole Reddit meme stock thing and kind of touching on whether it's some sort of manipulation or not. I don't really see that, and that it's necessarily, a true manipulation. I think the professionals are the only ones really doing that. Maybe. Who knows? Got to say hello to everybody. Good morning, Bill, Norman, Vince, good to see you. Tanya, afternoon all, tough week for me. Probably going to take a few days off. Well, you got next week for that as well. It is, as I'm sure we're all well aware, the Independence Day holiday on Sunday, I believe, is the 4th. I'm going to be out for the better part of next week as well, so looking forward to taking a little bit of time off myself. Jerry is awake. Good afternoon. Jorg, good to see you. And Norman, again, good to see. Go gold, right? That was quite the move right off the opening bell, just getting tanked. Tobias, good morning from Belgium. Good morning, Tobias. A new name I don't think I've seen before. Welcome to the Market Forecast. Thanks for stopping in and saying hello. Lemur, good to see you. Hello, everyone. Lemur says hello, everyone. So, all right, let's dig into what we did in the charts here this morning. I've got my notes. Let's see how the day played out. And here we go. As always, we'll start with the daily in crude oil. Get the daily up. So we were talking this morning, lost some open interest. The previous session coming off the highs, testing basically to weekly kickoff low. Last week's low, still maintaining range-bound activity. That test below those levels, I think, were pre-open. We were saying, balance rules remain. We're gonna look to fade the extremes until there's a sustained move outside of them, in which we would go with a breakout. We did not see that happen today. We remained range bound. Weekly kickoff, naked point of control targeted. Let's see how it played out. So here's that weekly kickoff and weekly low from last week that was tested before the open. The market came all the way back up, basically ranged in value and basically opened in range and in value. Best trade locations as the day goes on. We got to move up here against this high here. Kind of surprised that we didn't necessarily go up and retest this naked point of control from last Friday. Market weenied out up there, came back down to low from yesterday, turned around and basically ended up closing relatively close to where it opened. So we're going to be looking at probably some more range-bound activity as we get more and more data about crude this week. And the S&Ps. So we put in another new high in the extended trading hour session that we did take out in the regular trading hour session. We had a late spike situation that did get to the opportunity to get checked, but not until far later in the session. Take a look. Okay, here we are. It was mentioned to me this morning in one of the meetings that I have with my coaching clients that the S&Ps feel like they're on rickety stilts. I liken it more to a house of cards. There's so many targets for visuals to try and get to below. We've got a naked point of control here, one here. We've got a gap here, another NPOC, and another NPOC even down below that. But the market is not necessarily paying attention to them. And as a matter of fact, we may be seeing short-term traders chopping themselves up against the grinding machine that the equities are. Here was our open, we looked higher. We took out the high of the all-time high that was put in again last night. The market just found a spot up there, turned around, came back down, retested the base of the late spike. You can see the late spike here, and tested to the tick to the high from last week. Last week's high was our dead low in the S&Ps today. So, showing some signs of testing and rejection of this level as well as the late spike. The market is now continuing to move its upside move as we get closer and closer to the close here. Matter of fact, for all intents and purposes, I would say the market is for all intents and purposes closed. So we did see some pretty substantial negative delta in the S&Ps today. I'm going to show you this just briefly. Now, delta is a tool, if you will, where the market can show you how many more contracts are traded on the bid versus the offer. Negative delta is market order sellers hitting bids. We can see this morning the cumulative delta was on this, it's showing around minus 21,000. It finished the day right around 31,000. So 10,000 more contracts traded on the bid than on the offer through this session. Value is outright higher. There's an overlapping range, overlapping the higher range. The aggressive sellers were unable to really move price lower much. Now, what does that mean? It means that there may be some secret longer-term buyers in the market, and we see this happen. We saw it happen kind of yesterday. The market moved higher against Delta. Delta was negative yesterday, and it was negative on this day as well. Okay, this is, well, there it is, an obvious lower to higher all day. Delta increased in negativity, or as we would say, decreased in value. So we're seeing some aggressive selling going on up here, but we're not able to move price lower. Anybody who was looking at the auction process would probably be saying, this upside auction seems to be tiring. It's not bringing in more volume. It's cutting off volume. It's going to be interesting to see what the open interest does tomorrow morning, because if we added a whole bunch of open interest, then that's going to substantiate the fact that there was an accumulation of possible longer time frame longs shown us by the delta this morning. So the market continues to grind higher. It is continuing to grind shorts all the way up, which it has been doing for the last 35 years that I've been looking at it. Here's the NASDAQ. Also got a pretty deep test of the late spike from yesterday. We had added 2,200 in open interest, and the volume held up a little bit better in the NASDAQ yesterday than did in the S&Ps. A little bit off today. Again, we'll watch the open interest tomorrow morning. Let's take a look at the 30. So the market opens in the late spike, but there's a pretty deep move down, kind of beyond the low of the late spike, which I would call right around here. The market trades basically to, guess what, point of control. The NASDAQ has been pretty organized about doing that on this move to the upside until recently. We've got a couple of naked points of control. This one is tested. We've got this one down here and this one down here, which remains untested in regular trading hours. So there are targets down below, but they're only going to become important when we go in that direction. And right now, we're not doing very well at going in that direction. We're pretty much low to high all day today, again in the NASDAQ, low to high all day, again in the NASDAQ from yesterday. What's going to stop these things? It's going to take some sort of news. Here's gold. Here's our move in the gold. Excuse me. So we have a kind of a smaller area of balance here. This is the area that broke this market and got us in this big move to the downside. Unable to close below weekly kickoff low is a little bit of maybe a caveat to continuing to hold on to shorts. We want to see the market build some volume, spend some time down there to see if we can push this market to perhaps this swing low, or even worse, down to this swing low. I don't know if I see that necessarily happening, but I don't get to choose that. Here is our opening range. The high of the opening range this morning was 1776. Actually, I think it was 1775.90, but I just put 1776 because I like the number. It is, after all, Independence Day coming up, and we have a 258 tick move to the downside. Happened real fast. Within basically 1 hour, we had spanned this entire move. This was last week's low. This is weekly kickoff low for this week. Spent a little time there, but showing some rejection in the daily bar. We have to again see what we did as far as open interest is concerned, because open interest has been kind of dying off here in the gold. We've got a couple of days of increasing open interest, and maybe that's part of the reason we have this move to the downside. It's going to be another fun day tomorrow, folks. And here's the euro. Yeah, euro kind of does the same thing as gold as euro. You know, a little bit of a kind of a smaller area of balance in this bigger area of balance. We broke to the downside, but we didn't get the big push that we did in the gold this morning. Matter of fact, the opening range was right here. We put in this low pretty close to, not too close, within about 10 ticks of last week's low, and returning back and closing the gap. Doesn't look like it's absolutely closed. Pretty darn close, though. Close enough for rock and roll. And then just remaining range bound. 10-year still short time frame controlled, and you can see that because for 2 days in a row we've tested to a point of control. Yesterday, straight to it, the dead high. Today, straight through it, one tick through it, and basically, I think we're closing at this value area high. So here's the point of control. Here's the point of control here. I think we're going to be probably closing right on yesterday's point of control, our value area high from today. The convergence there, little confluence going on there in the 10-year. All right, so good evening, Tobias. Yeah, melt up in the ES again. So, I mean, if there's no bad news, the equities have done this for the 35 years I've been watching them. If there's no bad news, there's just an uphill tint to them. PK. Hello, Michael H. and Q, new all-time highs. S&P, new all-time highs. And it was kind of a yawner. It wasn't very impressive, was it? We used to on the trading floor, whenever the S&Ps would put in a new all-time high, we'd all cheer and, throw cards up in the air and do whatever. And then we'd just kind of look at each other and say, well, that was exciting. And that's kind of the way it felt today. I mean, it was, hey, we're making all-time highs. This is great. Yawn. As far as news is concerned, just kind of looking over a few things here. Eli Lilly's trying to make insulin a little bit less expensive for the people with diabetes. That's a good thing. Southwest Airlines is urging employees to take extra shifts over the 4th of July holiday to avoid disruptions. So, story here that more people plan to quit their jobs rather than return to the office. I find that to be kind of amazing. There was one other thing here that I was thinking would be interesting. Yeah, home prices are just surging. August or April, it says truly extraordinary by Kay Schiller. United Airlines is expecting to hire 25,000 people after they just placed a massive jetliner order. That's going to be about it. Something cool today that happened in history, though. In 1995, the American space shuttle Atlantis docked with the Russian space station Mir to form the largest man made satellite ever to orbit the Earth. Kind of cool. Everything else is really dark. Um, Something funny in this day in music though. Um, Anybody remember a song that was recorded by Little Eva? It was a song. Little Eva was babysitting for Carole King and Jerry Goffin. Now Carole King and Jerry Goffin were a wonderful songwriting team, and Little Eva recorded a song that Carol had written called "The Locomotion." If you remember The Locomotion, you're as old as I am. uh, it's Little Eva's birthday today, 1945. In 1967, Rolling Stones' Keith Richards was found guilty of allowing his house to be used for the illegal smoking of cannabis. Scandalous. He was sentenced to a year in jail. Mick was also fined and given 3 months in jail, but they both were out on bond the following day. Those bad boys. Absolutely nothing happened to Led Zeppelin on this day in history. I find that difficult to believe. In 1985, John Lennon's 1965 Rolls-Royce Phantom 5 limousine with psychedelic paintwork sold for a record sum of $3,006,385 at Sotheby's auction in New York. And that's going to be about it for that. Diego, when is this market going to pull back? I don't know, man. I don't know. It just. I have a theory that the equities have been eating shorts the entire way up. The short time frame traders love to play the short side because the money comes fast and hot. So they work the short side in the S&Ps and they just continue to get squeezed out and squeezed out and squeezed out. By the time they do get a big move to the downside, they're out of money or they just don't have the skills to deal with the volatility for those types of days. So it's just a natural tint I think that the equities have. You know, when you think about the equity futures are basically futures prices of baskets of stock, and stock, most transactions are buy side. Norman remembers the song. Carter, tips for passing the 30K combine. Why don't you come to the group coaching tomorrow? Just ask that question. We'll see if we can extrapolate a little bit more on it. I've got to get moving here pretty shortly. So, do you guys hire interns? We do. You can watch the positions on the website if you are interested. Yes, Zeppelin might have been on vacation that week. Uh, any opinions on the new FairX contracts? I don't have any real opinion on them. I gotta get a better look at them before I come up with anything like that. Tobias, thank you for being here from all the way from Belgium. That's impressive. And we appreciate your questions and thoughts and ideas and feedback, of course. That's what we're here for. So tomorrow, Wednesday, market forecast 8 a.m., group coaching 1 p.m., recap 3 p.m. I'll see you on all three of them. Get a good night's sleep. If you're trading tonight, make sure you keep your powder dry for what might happen in the regular trading hour session tomorrow. I will look forward to seeing everybody at the market forecast at 8 o'clock Central Time. Till then, be kind, be good to each other, and say a prayer for world peace and everything else. We'll see you tomorrow morning.